buying the best investment property, the next thing I want to go through and talk about is established capital benchmark. So every area has a specific capital benchmark where if you're buying at that maximum level, we think about valuers again, it's hard to get the valuers to push up over that. If we've got properties, might be larger than yours, but selling at 10, 20% higher than the investment property you're buying, remember we're buying under the median house price, but in that area, you've got more chance of the valuer looking in that area and seeing properties that have got more leverage to get a better valuation. So understanding what the areas of established capital benchmark is really important. Land content. I want to talk about land content for a period of time. The golden rule of investing, and this is something I learned from, and always like to tip my hat for where I got my investment knowledge early days. So probably the matriarch of property investing in Australia, Jan Summers. I started watching Jan's videos when I was 14 years old, and this is back in the day when she had perms, big shoulder pads, so it sort of puts you in the era of where I was watching them. But one of the things that rang true was the golden rule of investing is land appreciates and buildings depreciate. So if we think about, we break investment into multiple areas. If we think about an investment, while you think about it as one thing, people often look above the ground, and that's what they're focused on. If we consider what's under the ground, and the Australian Tax Office deemed that over a 40-year lifespan, with depreciation, the building, in effect, will be worth zero. The only thing that goes up in value is the land content. So the building's only purpose is to provide rental income to hold the land over that period of time while you're getting the increase in value. So be very clear that you are buying an investment property and it is two different assets. It's a beneficial asset, meaning it goes up in value, and it's a non-beneficial, means it's a depreciating asset. So if we think about land content, a lot of people get hung up on land content, and I've got a specific calculation in my Fleur of the Property Investor. But if we just consider that you want the land to be about double what, depending on whether it's townhouse, but a house and land, you want the land to be about double what the building's footprint is. So if the building is 200 square metres, you want that to be about 400 square metres. That gives you a good balance of amount of dollars spent on an appreciating asset compared to the amount of dollars spent on a depreciating asset. So hopefully that keeps you safe and gives you an understanding of land content.